Good morning. This is the video newsletter for Buy Sell Short for Sunday, July 17th. Before we start off and get into the charts, go check out the website. We've got an article there that I suggest all of you read. Very, very eye-opening and something we really need to consider once this stupidity in Washington has passed and the debt ceiling finally gets raised, which we all know it will be after this political posturing is over. But check out the article. M2 money supply, last 2 weeks, $165 billion increase in the M2 money supply. M2 money supply, essentially it's the liquidity that flows around there in bank accounts, etc., etc. It's the cash that's out there. And if you've been listening to me for any period of time, you know liquidity is the driver of the stock market. And the growth we have seen over the last 2 weeks, unheard of. Just to put it in perspective, in all of 2010 and in 2009, each year, M2 money supply only grew by $282 billion. So in the last 2 weeks, we've seen 60% of the money that was created in each of the last 2 years created in the last 2 weeks. So if you're wondering where this big rally we saw happen, essentially over the last 2 weeks, this report pretty much dates to where the market bottomed out in late June, up until when these debt talks really started causing an impact. We have seen one of the biggest growths in money supply, I believe, in 20 years, aside from what we saw after 9/11. So just a huge increase in liquidity. Once this debt ceiling bull is finally passed and put to rest, we have a lot of liquidity out there. And if you wanted to know what liquidity does, just look what QE2 has done to this market over the last 2 years, and that will give you an idea. So right after we get this debt ceiling passed, we're likely to see a very nice pop in the market, then perhaps a retrace on a sell the news event. But the liquidity that Bernanke has put into this economy right now, things look pretty good if you look at 6-9 months on the market. And, you know, check out the article, read it. Very, very interesting and very bullish for us in the medium term. Going to be very interesting as well to see what the next QE or the next M2 money supply report, I believe it comes out in another 2 weeks, another update, and see, you know, if Bernanke is still pumping the system full of cash. He sort of alluded to that in his speeches to Congress last week. You know, QE2 might be over, but Bernanke said they may do QE3, but not the same way that they did the last two easings. So this might be what he was alluding to. He's going to pump the system full of cash, and that is always good for stocks. As for the indices, we're looking at the Dow 15-minute chart. You can see we found some support at the 12,400 area. Breakout is the 200-day moving average at 12,550. Unless we get a deal early this week, it's going to be hard for us to really break out to the upside. Although we do have that liquidity running around out there. Like I said in the chat room, we're going to maintain our very high cash stance, 80 to 90% cash stance overnight. You know, we can play the market intraday. We're just going to be a little bit of caution, you know, have a little bit of caution right now until the debt deal is made. And then we can start playing doing more swinging of stocks and holding them a little bit longer. Dow daily chart, again, you can see after that big run up, we're holding pretty well above the 50-day and 20-day exponential. We've got RSI flat laying at the 50 level. Same thing with stochastics. Let me scroll down a little bit more here. Same thing with stochastics. So a positive scenario for this week would be, as the idiots in Washington continue to go back and forth, that we essentially see this market tread water. That would be great, because once we get a debt deal, boom, off we go to new highs over the next few months. SMH, possible double bottom in the SMH here on Friday. This is a very, very nice looking bottomed candle here. If you're playing the SMH long right now, which I know a couple of you in the chat room are, stops would be at 32.10. I know the recent June low was at 32.15, but give it a little bit of rope. Or you could place it at Friday's lows, I believe, which were 32.22 or thereabouts. We've got all the moving averages above us on the SMH. And if you go back and just look at this chart, after big sell-offs and big rallies, the SMH always works its way back to all its moving averages. So, we're sitting right now at 32.58. On the SMH, we've got the 20-day exponential a dollar higher, which the SMH always bounces back to. 50-day moving average is up there at 34.41. So you've got 35 cents downside, a dollar upside. Pretty good risk-reward ratio for a large cap ETF. As for some stock plays, NEI looks fantastic. It has been a slow mover for this one over the last couple of weeks as it slowly moved up. We finally got that breakout at 121. I threw up a Fibonacci retracement chart here, and you can see our target is obviously that gap down open from back in May up there at 140 plus, and that is our target on NEI over the next 2 weeks going into its earnings report. We got a positive ADX cross. Stock looks really, really nice. 8-day, 20-day moving average are starting to curl higher. RSI is above 50, looking really, really good for this week. ANDS was a fat little winner for us last week. We got our 20%, 15-20% move on that positive MACD cross, as I mentioned, which has almost been perfect over the last several months. We got a spike to 115. We filled that gap over the last 2 days all the way back to the 20-day exponential. Great place to pick up some shares if you did sell on that spike there earlier in the week for a secondary move back to 115 and then 125 plus. So that's what we're looking for on this one. Fill the gap, bounce back this week. CYCC, another biotech stock, and biotechs continue to be really, really hot. They're just going one by one. So these laggard plays in the ones, we feel okay just picking some up and sitting on them for the near term. Breakout here is 127, the 20-day, although really a break of 130, probably an ask thin on 130. I would look to add to my position for a run up to that 50-day moving average and 200-day moving average, hopefully this week. ALAN, been pretty quiet since its big run last month, but it is coiling nicely in this little flag formation. A break of 2 and off to the races we go. We've got 10 to 25% upside this week, I believe, and I'm thinking this one goes, it's going to go tomorrow or Tuesday. And if you're playing this one, stops $1.68. If you're a little averse to having such a wide stop on this one, then you can go with Friday's bottom there at 180. Sirius, which we have been very patient with over the last few days, finally did that big breakout move over the last couple of days. Looks great for a move up to new highs this week. Rock solid support now at the 8-day moving average, 223. We should see this one nicely higher into its earnings report, I believe, which is a week away. Last but not least, MOVE. This was a fat 25% mover for us 3 or 4 weeks ago on the Away IPO. This week, either Tuesday or Wednesday, we've got Xylo doing its IPO, and that is even closer to the market segment of Move than Away was. And they're pricing Xylo at a $500 million market cap. To give you an idea, Move has a $340 million market cap. Xylo has no revenues. Most recent report from the SEC filing, $30 million in revenue for 2010. Move is doing $200 million. And Xylo is going to have a 50% higher market cap. Would be looking to add this one around the 210 area for a rebounce back up there to the 230s, just like we did on the Away IPO. Chart looks good for another go on this one. Worked last time, should work again, and this is, again, the only pure play on this IPO, and over the last couple of IPOs, we've done really well playing these sympathy plays. So that's it for the video tonight. We're doing more intraday scalping right now until we get a debt deal pass, playing the intraday momentum. Once we get that, we can start swinging a little bit more and reducing our cash stance. But until then, we're just going to play it cautious. There's lots of trades intraday. Definitely come into the chat room. Definitely read that article posted on the website. And if you have any questions, feel free to email me. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.